Hey everyone, and welcome. Today, we're going to do something a little different. We're giving Sri Lanka's economy a full-on health checkup. We'll take a look at its vital signs, see what's looking strong, and maybe spot a few areas of concern as we head into 2026. So let's dive right in. So, how are we going to do this? Well, our guide is the latest weekly economic indicators report from Sri Lanka's central bank, hot off the press for January 2026. Now, this thing is absolutely packed with data, but our job is to figure out the story these numbers are really telling us. I want you to think of this as a doctor's visit for the economy. We're going to check its pulse, take its temperature, and look for any underlying warning signs. Let's get started with the examination. And right off the bat, the initial signs are actually pretty promising. We've got several indicators that are pointing to a really healthy economic pulse, giving us some solid reasons to be optimistic at the start of the year. First up, let's talk about something that affects every single one of us, the cost of living. Headline inflation, which is basically the overall change in prices, held steady at just 2.1%. This is fantastic news for households because it means the prices you're seeing at the store are stable. Okay, so what's the mood of investors? To figure that out, we'll look at the stock market. The All-Share Price Index, or the ASPI, jumped up 3.6%. And get this, that was just in the first week of the year. That is a really powerful signal of confidence in where Sri Lankan businesses are headed. And you know, this optimism isn't just some abstract number on a screen. It's built on the real-world performance of actual companies, from banks to manufacturers all across the exchange. And that kind of confidence, well, it can have a huge ripple effect through the whole economy. And here's another great sign of confidence. Government bond auctions were oversubscribed. What does that mean? It means there were more investors, both at home and from abroad, who wanted to buy government debt than what was actually available. That is a huge vote of confidence in the country's financial stability. But, a really thorough checkup means you can't just look at the healthy surface. You got to look a little closer. And when we do that, we start to see a few, concerning symptoms. Some subtle warnings that maybe things aren't quite as stable as they first seem. So this is where it gets really interesting. We saw that headline inflation was stable, right? But core inflation, which strips out those really volatile things like food and fuel prices, it actually sped up. This hints that there are some underlying price pressures building up in the system. You can think of it like this. Your body temperature is normal, but your heart rate is a little elevated. It's a subtle sign that something's up. Another thing to keep an eye on is the prime lending rate. It ticked up to over 9%. In simple terms, this makes it more expensive for businesses to borrow money for things like opening a new factory or hiring more people. And that could put the brakes on economic growth down the line. All right, now we have to turn to what the report calls out as the biggest challenge of all, the country's external balance. We're talking about the growing gap between what Sri Lanka buys from the rest of the world and what it sells to it. And wow, the numbers here are pretty stark. In the first 11 months of 2025, the money earned from exports grew by a respectable 6.4%. But spending on imports surged by 14.2%. That's more than twice as fast. It means Sri Lanka's spending abroad is growing way, way faster than its earnings from abroad. And that imbalance creates a pretty big hole, a trade deficit of $6.9 billion US. Just to put that in perspective, that's a huge jump from the $5.2 billion deficit a year earlier. And that puts a major drain on the country's stash of foreign currency. Now, to understand this a little better, we have to talk about something called the terms of trade. It sounds technical, but it's actually a really simple idea. It just compares the prices of a country's exports to the prices of its imports. It asks the question, are you getting paid more for what you sell, or are you paying more for what you buy? And the data shows Sri Lanka's terms of trade have gotten worse. This basically confirms that the prices of imports are rising faster than the prices of exports. So not only is the country buying more stuff, it's also paying more for that stuff relative to what it's earning from its own sales. So we've done the full examination. We've looked at the good, the bad, and the complicated. What's the final diagnosis? What's the big picture of Sri Lanka's economic health right now? So let's break it down. It's definitely a mixed picture. The strengths are pretty clear. You've got strong investor confidence and those stable prices for consumers. But the weaknesses are just as serious, that huge trade deficit and the creeping underlying inflation. All this adds up to an economy that looks stable on the surface, but is facing some pretty significant pressure from the outside world. And that leaves us with a big central question for 2026, doesn't it? You have these two competing forces.
strong confidence inside the country versus this mounting pressure from outside. So which one is going to define Sri Lanka's economic story this year? That is the key thing we'll all be watching.